All right, Patrick, obviously we have PCE coming up, a lot of stuff going on. How do you see today shaping up? What's your word of the day?
The word of the day is stamina. You hear it in the political realm a lot with, a couple months to go in the election. I think the same should be said for the investment landscape.
All right, spell that one out for us. When you say stamina, what do you mean? I mean, do you stay with some trades that are already working? Do you continue to put money in the market, even though a lot of people think there could be some volatility to come up? What kind of stamina are you talking about?
I think if you put together a plan of investment, you have to stick with it. And I think that's what it takes stamina to get through every kind of market. Right now, we've hit an uptick given that, the Fed cut rates recently. And I think you got to continue with your investment plan. And, we've put together a plan at the beginning of the year and we've followed it and we're seeing it through the end of the year.
Obviously, we have PCE coming up today. I want to get your take on what you think that could mean for the market. And then a week from today, we get the jobs report. What are your expectations for both?
Yeah, well, I think the Fed is frankly more focused on growth rather than inflation right now. And so I think next week the number is probably a little more important than PCE. But, if we're in line today, I think that's healthy. Obviously, if there's a surprise number to the upside, that won't be good for the market. But I don't think many are expecting that to happen.
All right, I know you have a pick for us. We're going to get to that in a second, but I just want to ask you just more generally about the market. Surprised by some of the moves we're seeing. We were just hitting on the fact that small caps, they're actually down almost 1% this week. A lot of people, and I'm not calling them out, but timely, a lot of people said that small caps are really pop after that rate cut. We got a bigger rate cut than many people expected, and we're not seeing a big move in the small caps.
Yeah, because, there's this growth risk, right? And anytime you're heading potentially into a recession, I'm not saying we're near one, but when there's any question of recessionary pressures, you don't necessarily want to own small caps. You want to own small caps when you're coming out of a recession. And I think that's why there's some of the weakness. It's really been focused on large cap and, sectors like industrials, which I think will do a lot better in a lower interest rate environment.
All right, speaking of stamina, we've seen some big upside moves when it comes to Chinese equities. David Tepper pointing out he believes there's kind of a valuation discount when it comes to Chinese tech. Are you seeing any opportunities to exhibit some of that stamina when it comes to investing in China?
Not necessarily China. In your last segment, you were talking about the Chinese consumer actually being weaker in luxury brands. I think if you look at the U.S. consumer, right? I mean, you've heard things like dollar stores come out and say, the lower income consumer is very weak, cash strapped or some of these things they were focusing on. And I think that you have to really look at the U.S. consumer. Credit card delinquency over 9%, highest in over a decade. So I think that's something you have to continue to watch. Look, the sort of millennial Gen Z are still spending, whereas baby boomers are in, probably the most debt they've been in as a share of consumer debt in over a couple decades. So I think it's just something we need to continue to follow in the consumer space.
All right, Patrick, we're going to get to your pick very quickly. Canadian Pacific, Kansas City, it's a rail. As we talk about a possible port disruption, why would you invest in this stock right now?
Well, I don't really see the port disruption affecting them very much, in regards to their lines. Like the labor strike is behind them. It's heading into arbitration. This is a company that will benefit from the theme of nearshoring. So regardless of who wins the U.S. election, I think they benefit. It's 20% cheaper than trucking. The rails, you're not really building a lot more, and they own all the rails from Mexico to Canada.